Hi, my name is John Alzheimer, and I am a credit expert who contributes to creditcardinsider.com. Today's question is this: what is the difference between business credit cards and consumer credit cards? It's a very, very good question. A consumer credit card is a credit card that pretty much anybody in the country can get. They're issued by Visa, MasterCard, American Express, Discover, issued in those brands by well over 10,000 different financial institutions, including banks, credit unions, community banks, large banks, monoline credit card issuers, and finance companies. Business credit cards are a little bit different in that they are supposed to be tailored specifically for small business users. So in other words, people who own stores or people who own retail outlets or small business owners like people who do lawn care. Myself, I'm a small business owner, so I have small business credit cards. And the card, it looks very similar to a normal consumer credit card, has an account number, has a magnetic strip, or an electronic chip, if that's the type of card that you have. Same type of layout, can be used pretty much anywhere that a normal consumer credit card can be used. The primary difference between the two types of cards is liability and credit reporting. A consumer credit card, when you go out and you apply for a card, whether you do it online or whether you do it in a branch of a bank, or you get a credit card offer in the mail and you fill it out and you mail it back in, you are signing to be liable for that card yourself, meaning that if you make charges on the card, you're liable for the debt. If you do not make payments on that card, then the late payments can be reported to your credit reports. With a small business card, it is being filled out not only in your name, but also in your company's name. So, ABC Inc. or ABC LLC is the name of the company, and that company is the company that's essentially applying for the card and is liable for the payments on that card. There are many scenarios, however, where the small business owner or the principal is being asked to sign what's referred to as a PG, or a personal guarantee. In the scenario where you're asked to sign a personal guarantee, not only is the business liable for the debt incurred on the card, but the owner or the principal of the company is also personally liable for the debt incurred on that card as well, which means that if a debt is incurred on the small business card and it is not paid, that the bank can not only go after the company for payment, but they can also go after the business owner or the principal because they have signed to be personally liable for the debt. Now, when this happens, the bank can employ the same types of collection activities or tactics that any normal consumer credit card issuer would employ. This would include negative credit reporting. They can also outsource the collection of the debt to a third-party debt collector. They can even sue you, not the company, but you as the individual, since you signed the guarantee for the debt on the card. That's the bad news. The good news is that in many scenarios, if the card is being paid on time, and it's what's referred to as a performing liability, the credit card issuer will not report the activity of that card to the principal of the company's consumer credit reports. And this is a very big deal because in many cases, small business owners use personal credit cards to fund operations of the business. And what happens in that scenario is the debt that's incurred on behalf of the company ends up showing up on the credit report of the owner of the company, and it can cause harm to his or her credit scores and make it more difficult to do things like refinance a mortgage or go out and get a well-priced car loan, for example. So the small business credit card in many scenarios actually kind of builds a wall between the business debt and the consumer credit reports belonging to the owner of the company. There's also one more thing to keep in mind. Most cards these days have some sort of rewards program associated with it. So it's either going to be cash back, points, airline miles, something that you get a tangible benefit for. There is a scenario, and this is something you're going to want to consult with your tax advisor for, because I'm certainly not a tax expert. If you have a small business credit card that has a rewards program, and the company is realizing benefit of the rewards program, then that may have created what's referred to as a taxable event. And that could be something that the company has to report on their as some sort of income or benefit, and may have to actually pay taxes on that. Again, you're going to want to contact the company wants to contact their tax advisor to get the specifics on that. If you have any other questions pertaining to credit or other financial topics, then please submit them to creditcardinsider.com or in the comments section below. Thanks a lot for your time. Have a great day.